Morning, guys. It's Scott here, and it's 6 a.m. and I'm doing my daily scan. So I thought I'd take you through it a bit today. Excuse my kind of crappy setup at the moment. I had to reinstall my server, and it's all kind of a bit balked. So the first thing I want to point out is that we have the E-mini, which is the S&P 500 futures, refusing to go down. We just broke the high of this hammer candle. But on the YM, which is the Dow futures, we didn't break the high of this hammer candle. And on the NQ, we went down and then painted this big reversal bar looking thing. So the NQ is arguably the strongest. So the strongest index is leading the way. The big caps are leading. So when we get this kind of behavior where there's just small differences between the markets, it's a sign of instability. It's a sign that you want to be cautious with your profit banking, especially if you took this Thor yesterday. Long here, stop here, still intact, looks good. If it breaks here, it should be off to the races for a little bit. We also have another Thor short setup in crude that does have 1.2 to the lower Bollinger. It's a valid setup. It's not the nicest setup I've ever seen, given the strong move here. I wouldn't be very surprised if that one didn't work out at all. Gas, we had this gap which we discussed yesterday, natural gas, and it was a gap and go down. Let's just make sure that data is correct. Yeah, that's what it really looks like. So the learning moment here is that large gaps are statistically unlikely to be filled same day. So all that stuff about gaps must fill, that's bullshit. You know, that's just rubbish. Okay, so the big news is this bad boy, the dollar index. So we have this outside period up here at the highs. We have a big move down from the highs to the lows. It's a very substantial move. And yesterday we went down and reversed. So this was exactly why I told us all to stay out of the FX swimming pool yesterday, because it was likely to do some nasty ass thing like go down and then end up higher. So that's exactly what happened. So now we have the big question. We have a double bottom here in direction of the trend. This is a valid setup. I'll be playing it on the 240-minute chart, looking for entries, but if you want a nice, easy entry, we have all the elements of a valid setup. We have a spike low, we have a movement away, we have the first bar to break that spike low. If we open inside the range and break up, this is a very nice setup. Okay, so let's keep moving on. The big news overnight is in bonds. We have this Bollinger pinch, and I said yesterday that if this breaks down even a little bit, this is off to the races. So clearly we have strong kickoff to the move. It's busted through this Bollinger resistance. Here we have the Bollinger pinch and the close outside. This is probably the nicest looking one of all, actually. This is the money right here. But they're all in line. ZF, ZT is the strongest, but still going down. These are the markets that should be on your intraday radar. The 30-year bond, the 10-year bond, the 5-year and the 2-year. These are money. These are going to be what I'm looking at very hard in the failed breakout. But they're just so strong, it's hard to get an entry right now. Okay, let's look at the means. Okay, we have this inconclusive kind of very small candle, low volatility thing in soybeans. Soybean meal, the same basic deal, inconclusive. Inconclusive. It's a downtrend, but you know we're starting to get into serious mean reversion territory in corn and wheat. We're getting some typical resistance at the upper Bollinger. I don't see anything that particularly makes me go, I have to trade that. And we don't have any valid setups, so That's the end of the thing. So let's look at the metals, which are more interesting. Now, metals are primed for some mean reversion here. So we have retest buy setups in gold, in silver. Do we have them in platinum? Maybe. Definitely in copper. So we have the low, the higher close, and the lower close. You can get long here, stop at the low. Now, we have yesterday's double bottom set up in platinum, which is working. So what is the best way to trade these type of mean reversion setups? So the first thing I want to notice is that out of the 5 markets in the metals complex, we have 1, 2, 3, 3 retest bottom mean reversion plays. So you can't take all of them, obviously. You got to pick one. Personally, I pick the smallest range, best bang for your buck. If they're all very similar, gold is probably where you would do with that. So you go long here, stop here. Now, the way to trade these is by not getting too ambitious and think that we're going to start a new uptrend. The highest probability is just either some sort of trading range or some sort of quick mean reversion like this. So you can see here that once mean reversion starts, it tends to go for a couple of days, and mean reversion, if it starts, it'll break this high. So definitely a valid setup, definitely worth looking at. Let's look at the currencies. So we're going to see what we discussed yesterday, which is the what we call the all the same turd problem. Everything's the same. So strongest market is this USD JPY, which broke low, now is painted a hammer candle. This is probably a fairly strong probability to continue upwards during the day, so this is something I'd be looking at intraday. USD CAD, it's still choppy, but the odds are increasing that we found a bottom. We have an inside period, go long on the break of the high, short on the low. We have cable, the Great Britain pound. If it breaks here, we're probably into some substantial mean reversion, at least up to here. If it breaks low and continues, then this trend might be back on, and it's a good trend. NZD USD is a Thor setup. It's definitely a valid setup. It's not a particularly high probability setup, but then Thor setups are not high probability by their nature. They're kind of speculative ones with big winners mixed in, like all trend following setups. So let's go back to the failed breakout, and we're going to see what we're going to see. So the markets that I really like are the bond markets right now for this system. And the problem is that haven't had a valid buy setup yet because this move is so strong. Like, these moves are really, really strong. Let's look at the ZB, which is the 30-year, which is the biggest market, and the so you can see that we're falling off the plate, and we're a long way from any of these moving averages. So we need to paint a better pullback. I was in bed while this failed hammer kicked off, so I didn't get to take that one. So ZB, ZF, ZN. And ZT is the strongest of these markets, but it's still going down. So ZT can kind of be a weird market to trade because the tick values are the ranges are so small because two-year bonds don't move around very much. They're incapable of moving around very much. So you have to add in a little bit of extra slippage on either side because you're going to get that. Okay, so if we look at the weekly chart on all of these, this is a very solid downtrend on the weekly. And if we just look at ZB again quickly, you can see, we've reached resistance, inside bar, painting down, we're going down. We're overwhelmingly likely to at least test the bottom here and probably make a new leg down. This smells awfully like a move that's going to go on for days and days and days. So right now, front and center on all of your trading should be bonds. Now, so let's look at the FX market. We'll start with the dollar index. Okay, so you can see we have. It's not quite conclusive yet. Things get choppy in markets when they get back to around here. I personally think any retest of the lows, you could have gotten along here and stop here, but I was asleep, so I didn't take that one, obviously. Any substantial retest of the lows or vice versa across any of these related currencies is looking pretty good from here. This is somewhere short of certain. So you can see with Aussie dollar, after the big outside bar news, we're sort of back on track. We looked like we were going to fall down, and now we look like we're back on track to do it. We have no retest of this high, which is significant, which tells us that the sellers are quite strong. I'd like to see another move up to here first and see that move fail, just to exhaust the last of the buying pressure. So AUD USD should be on our radar, but nothing yet. NZD USD, you can see we have a Thor set up here. Again, we have no retest of the highs. This one should definitely be on radar. GBP USD, same basic deal. This one is pretty nice, actually. So if you were awake, you could have got short on the break of this low. Stop here. It's probably likely to go back and retest that, so you could take a position there. Actually, that's something I'm going to consider when all this is over. I'm going to make a note of it. 240-minute retest. Okay. This is a nice trade. Let's look at Euro USD. Same thing. So we're seeing what we saw yesterday, which is everything all behaving the same. So we have this retest pattern here. The low was not broken. The low was broken here. If this breaks low, this is going to be a big winning trade. So you've got the unfortunate situation that you've got a highly speculative trade, which is it's a highly speculative, so it's short of the win rate we want, but the payoff will be huge. It'll be a it'll be a huge win if it comes off. Okay, so let's look at a couple of others. And you have to remember that we're at turning points. Okay, so we have a nice potential low here. This one is good. So if we break this line here, stop below here, this is probably the best of them so far. You know, we're at support. Not bad. We're going into a choppy phase, though, so that choppy phase is likely to continue. Maybe it's not the best. Let's have a think about that. Let's look at USD CAD. Okay, you can see the retest at the lows. Let me just reload the data to make sure it's all correct. We've got an inside bar, still choppy. Could have gotten along there, but with a stop here, but I was asleep. Probably a bit coin flippy for me. Probably a little bit coin flippy. And let's look at USD JPY. Okay, so this one is quite nice. If you get long here, stop at the low. If this low survives, you can see that a hammer low formed after such a big move. You know, this is from 100. This is like a 300 pip move. If this low survives, it's likely to survive for a while. Like this low survived for a while. So USD JPY is a really nice trade. I think I'm going to take that one. Okay, guys, enjoy your day. So to recap, bonds are on the radar. Currencies are back on the radar, but they're a little bit more speculative. There's some nice daily chart patterns. The indexes look like they're going to go up. Enjoy your day.